This conference will now be recorded.
Hello and welcome everyone to another night shift review. We have Matt here and he's going to be breaking down M from today. Uh, Take over, Matt.
Cool. Thanks, David. Yeah, so I've got a kind of a little bit of a video journal that I made this morning. It's not exactly live. I tried doing it live and it didn't quite work. But I wanted to go back and make sure that I kind of walked myself through my thinking and the prints while it was still fresh. Just because this felt really clean and really easy, and I wanted to make sure uh, that it actually was how it felt and not not something else. So um, kick it off here. We got really good large 22 bid prints in the pre-market, about 4 times the size of print personality, which is about 3, 4 maybe. I didn't quite get that, but that is there. So you can see the money flow here on the right before the market opens is still mostly buying, which told, or kind of made me think about, all right, this is probably going to have a little bit of a quick pull up. Either way, I don't want to be anywhere near the 22 level, knowing that it has this shark there. And I also knew that we had great volume, so building was expected to happen quickly at the open. So I was really just waiting to see what the prints told me and try not to rush anything. So right here, uh, pretty much just pay attention to the prints, not the chart, by the way, since we're kind of looking back. So right about here is where we kind of get in the open, start trading. We get those nice 22.13, 22.23 off level bids, which will kind of help our cause. Still really looking for this pull up here. We know it's going to be quick because of volume. Keep cruising up. Money flow is looking to be a little bit of selling, but I don't want to make anything out of the noise. And then we get this 2250 ask here. And for me, that just made me think, all right, great. Well, these are going to kind of pull back. They're at or just above print personality, but I'm thinking these are going to pull back and just be the catalyst we need to go back towards those 22 bids. So we're trading in 50-cent increments. We're already an increment away from uh, the controlling market maker. So at this point, I was just looking for a trigger down to build to head back towards those bids. So sure enough, we triggered down pretty quickly, almost instantly. We didn't get any new buying, any significant buying above. I took an entry. You can see on my screen there. I got in at 22.42, and then got some nice off-level uh, selling as we kind of head back down towards 22. And then right there, we got them as those purple prints. So those are just blanking right now. What do we call those?
Below the bid.
Yeah, below the bid.
Yeah.
There it is. Um, I didn't see those hit, so I assume those were actually just more bids. So that automatically kind of put me on defense, just knowing that this could pull up. So definitely be mindful of those. So we should keep cruising here. Got a little more selling underneath. Got some off level coming in. Nothing too crazy. We've got some 22 ask. And I thought those might be covering, but since we gapped up from the night before, it made me wonder like, all right, who is covering and from where? So that made me think, all right, these are actually ask prints. So that's great. So I'm thinking that's only going to help us with our pullback in addition to these 22 bids, which is kind of funny because they're at the same level, but they're helping the game plan so far. So this is good. And we kind of break above, get some more off-level selling. little more gas in the tank, head down, more great selling, and then we quickly um, kind of trigger back up towards 22, and then I got out right there because I didn't want to give up my entire position or my entire win at that point. I figured we'd have another entry, which I took, but it was kind of foolishly because it's at the 22 level, the very level I was trying to avoid. We know there's going to be a lot of games there, given the size of the market maker. And that same thing pretty much happens. It just went into consolidation before eventually going back down, towards our monetary goal. And I can hear Rich shaking his head right now because it never went back to test the trigger that I took on entry. So I should have just left it there. I can feel you seething, Rich, if you're here. Um, Definitely something I need to work on is just holding my winners. But in this instance, I was just happy to be up and just at this point just sat out and watched it play out until it eventually did trigger back down. But yeah, overall, that was my read on it.
It was
Seemed pretty clear.
it wasn't the smoothest trading stock, was it?
No, I
Especially
wasn't,
around that
especially around
22.
that 22 level.
Yeah. I think something you really didn't mention much was the fact that 22 was a whale and how early they came in the pre-market. So anything else like that's 22 covering, it's relative to the whale that came in at 22 and was dominant,
Hmm.
wasn't really too much to be worried about. It's just like you're if you put a lot of weight on that or you see those 22 and it changes your whole consensus, it really shouldn't because you know think about it relative terms of how much was at 22 in terms of the selling that was there. And we
Sure.
know it was a gap up as well, gapped up above a psych level like 20, and then they come up to 22, and they just relentless at 22 in terms of selling. And I didn't really hear a game plan in terms of like pulling up, how much expectations of the pull up you were expecting before you could take a trigger down.
Yeah, so I was expecting, just like we talked about in our last round of classes. Sorry if I kind of glossed over some of that. I
Mhm.
was focusing on the tape and trying not to miss anything. I was expecting a 50-cent pull up. Those were significantly sized bids, but like Rich mentioned in our last round of classes, when you're getting bids looking for a potential number three or that pull up, it's got to be like 4 or 5 times what we would normally look for in like a number one building, for example. So we have to kind of cut our expectation in half. Otherwise, something that size, I would have said $1. Um, but that was kind of my takeaway was, yes, this is significant, but uh, these are also bids early on, so I'm gonna have to kind of keep my expectation conservative and just look for a 50-cent pull up. And then when we got those 22.50 ask, that just kind of confirmed it that all right, this would be a good spot for this to pull down. Because why would the guy, uh, print those there when you could do it lower? So that was my expectation with the bids in 22.
Yeah, I don't necessarily know if the 2250 aspirants there really suggested that that sole factor was the time to go now. I think they were like maybe a below print personality. So if you were just looking at those themselves, that really could have been someone just covering there off of them being short. So it's not like a major factor. I think more or less the level itself, the 2250 psychological level, and also
Sure.
those off level bids that came in. I think was it right before the open or at the open on the push up.
Yeah,
You
right at
ended up
the open.
Yeah, you ended up getting some really nice bursts of off level shorter term bids that came in above 22. I think those stood out a lot more, held more weight
Yep.
because I
Yeah,
mean,
seeing those and then seeing the ask, it all just kind of worked together in my
yeah,
mind in a moment.
yeah.
Um, so it was just like, oh, all right, I'm gonna look for a trigger down here.
And then price target as well. I didn't hear much on the price target aspect of from the market maker at 22.
Yeah, so I was looking for 21, given the size of it. Um, but then we never really, as we were going down and we kind of pulled back up, it made me think, all right, they're not quite done building, and that's why we went into that consolidation. And that's where I just kind of got spooked. but still fully expected the 21 price target.
Cool. Does anybody else have any other thought processes or insight from Matt, and maybe their perceptions of how they traded it today? Maybe something that stood out to them.
I think you know I'm going to say something. All right, Matt. I was one who I took this short from 22.50 down. I don't know if you remember why I took it and what points I made for taking this.
No, I wasn't looking.
There was only one trade here. That was the initial trade short of 22.50. When it went up in the first few minutes, somebody put extremely large off-level sell 2 times, 2 different market makers. They were clearly supporting market makers because what did pre-market tell us who the dominant guy was and where was he?
22.
It was at 22. Would you say that was clear from that moment on?
Absolutely, yeah.
Right, so you got your dominant market maker, right?
Yep.
What should happen if a market maker has collected all his shares already at 22 in pre-market? What should you technically have been seeing? One of 2 things, right? So if he's got all his shares and he wishes to run an exception, what will we most likely see usually happen straight away after that much shares being collected?
Other market makers coming in off level to
Bang.
jump in and write it down.
Well, not write it down. I said run as an exception on buying. That means it would go up, right?
Oh, yeah. Okay.
So look,
I thought if we're
what I'll
talking
try and explain to you is,
exception, it would run without pulling up.
right, so prior to the open, we have very clear information that there was a lot of buying in this, right?
Mm-hmm.
So now you know the dominant market maker is sitting at 22. There's 2 things he's going to do with his level. He's going to run it as an exception. Supporting market makers will come in and help that position move along, or he's going to do that, pull it back, and start building more on his position. Either way, wouldn't there be clarity after what you saw? If you looked at relative strength of pre-market, shouldn't the open market be far more clear?
Yes.
Right. Was it?
Not entirely. We had a couple bursts above, and that was pretty much it.
It wasn't at all. The only thing that was there was off level. The only reason I took this trade, 22.50, about 16 prints came in on ask. The absolute clear reaction was we're coming right back down. What was below it? Between 22.08 and 22.12 and up to 2017 to 23, I saw 2 big spurts of sell that try to hide themselves. Came right back down to it, pulled under. There was only one trade here. As it came back down, he built again at 22. Then it goes back up, he builds again at 22. So what do you know about this dominant market maker who showed his face in pre-market, who exerted no force in open market, and then decided, I'm going to be playing my games around this 22? What did he say to all other supporting market makers that he's going to do for the day?
Build. Consolidate.
He's going to build it, but how's he going to do it?
He's just going to keep hitting.
He's going to absolutely not respect anything. Was 22 respected for how big he was?
I mean, it consolidated for a while, so yeah.
I'm saying that level 22, did he show respect? Why do you think you have those big monstrous bars going above and below? What is he doing with his level?
Just oscillating.
He's playing the best games there are, and he is shaking the shit out of the shares. Do you want to be playing in a stock like that?
Nope.
Should you even been in this stock, knowing that what happened, how dominant he was, and the method he was using around that 22, and how it never moved anywhere? When it came below, it would be in a dip. If it goes above, it's an ugly bar that regresses just as fast. Is there anything here about this bipolar fucking stock that you should have been in?
No. I got out quickly and stayed out.
Right. So the key is it's easy enough that you come in and find reasons why and how to expand upon it. I'd rather tell you there's certain times that you just got to stop and get away from a stock, but how and what you see. Now, after what I told you, do you understand what to look out for next time?
Absolutely, yeah.
Yep, just get away from them. Once the trade is over and they start playing their games, they're into position now. Now they start them on their strategy for the day. That's when you do what? What was the next thing that I came out with straight away? And then me and David started talking about what was the prints I identified after I took this trade?
I didn't see. I'm not sure.
David, what was the trade?
It was AMD 0.58 aspirins ballsy.
How much did we make on AMD? How many dollars net?
It was like 2+.
Minimum, right? To get
Yeah,
to 5.
minimum.
And I kept I know I kept 30% of mine, added a little bit afterwards, but above 95. 50 I added because I saw I could tell by that time what was going to happen. That stock ran. We probably made about $4 or $5. How would it have felt if I stayed on this, not knowing what was going to happen next, and missed out on that opportunity, which literally was right after this? So it's very important that you understand what's going on, so you don't get stuck on a stock. That way you can get shaken and be part of the mess, right?
Absolutely, yeah.
But on stocks like this, get away from it quick. And one of the things to all of you that are listening, if you don't hear some of the veteran traders or Rich or anybody talking about the stock that you seem to be looking at, what should you be doing, honestly? It's a bit of common sense, right? If no one's talking about a stock and you're the only one looking at it, do you really trust your eyes that much?
Yeah, not at all. That's why
the easiest hint of a Discord room. That's the reality of it. Nobody's talked about it, and I could see the ones that kept talking and talking. Did I talk about this anymore? Not once. Ask David. David, what did we talk about after this?
AMD.
Is there any reason to talk about any other stock than one that has so much range, so much volume, and such clarity in what it's doing? There's no reason. So the reality is, Matt, is it's easy to sit and we could digest about how this trade could have been cleaner, how you could have expanded upon your thought, how you could have laid out your strategy a lot better. But the reality is you also need to know when to look and what you see in a stock that says, I don't want to be in this. And I don't, until or something changes, personality changes completely, and I can see more clarity and a clearer trade. Don't waste your time either. We do have limited time when we're in the market. So especially in certain spurts and moments where it's so busy and so much volume, you don't want to get stuck watching things that aren't good. Okay?
100%. Appreciate it.
Yep, no problem.
David, are you still willing to break down another stock?
Yeah, absolutely.
Recording.
Before we do, can I just ask a couple of questions just around personality of the day?
Surely.
I guess the first thing is, like, I've sort of was watching some of the brand name stocks just to sort of get a feel, but I don't know if I'm not looking at enough of them. I know some guys are doing, like, they'll have a 9x9 of just the brand name stocks just to get a feel for personality of the day. Can I get someone just to rattle off, say, the top half a dozen tickers that they look at for that sort of personality of the day? Because I had Apple, Tesla, I think Facebook, but what are some of you guys sort of top half a dozen or so tickers that you look at?
So RIVN is one, Oxy is one, AMD is another one. What else? Those are the few I know off the top of my head, but
Okay.
Does anybody else want to contribute to that?
And I guess my other question is that at what time this morning was that exception personality clear to you guys? Because I didn't pick up on it until a bit later in the morning, but from what you guys were seeing, roughly what time in the morning did you guys, it was clear to you guys that this is going to be an exception day?
I don't think it was a specific time. I just looked across the board, to be honest with you, and I saw there was multiple levels that haven't properly pulled back from. More specifically, I was watching in-depth AMD, and at the point where it got above 95 is when the exception mode starts to really kick into your brain, especially when a stock goes above a psych level and it doesn't really have a significant type of pullback or pull up until that point, and it doesn't, and you get continuation. I think at that point I start to transition up, and I look across the board is really how is the psych levels, are they being held and then continued on? Because obviously those are the levels where you get the largest pullbacks.
Sure. Okay, that makes sense. That makes sense.
But in terms of everyday stocks, like I don't watch Apple or Facebook or any of those. I mean, relative to how much I day trade, those is very minimal. That's more of I typically don't watch those. It's more of like the Oxys, the RIVNs,
Okay,
those type of stocks.
okay, fair enough. Thank you.
the Roblox, etc.
Okay, cool.
But this is LCID back when, I mean, it looked promising. I was going back through a lot of old videos back in, I mean, just a few months ago, and the relative price of the stocks that we're trading now to what they were a few months ago is actually kind of interesting. I mean, but nonetheless, this is going to be a trade from the pre-market, and then you're going to have a show of hand and just analyze and break down your thought process within the setup going into the open. If you need me to pause or anything, or you can't see clearly, just let me know,
Okay.
and we're off to the races.
So in terms of the show of hand, that's obviously not those 54 house prints. Okay, well there you go. They're 55 prints. That
Yeah,
just
so
came.
these 55 here are your show of hand during the pre-market,
great.
9-10 a.m.
Okay, sure. All right, so that's our show of hand. I guess I'd be looking at reaction at this point. And seeing what potential other, if there's any other market makers coming on board at this point.
Is it visible on your end? It's not too blurry?
It's a little pixelated, but I can manage.
Okay.
So it's overextended a bit past the 55. Not seeing anything compelling for a number 3. Just waiting.
Also, a note to make is looking at the daily, smart money is safe to say that they're long, and they're long heavy. Or they have been, at least.
Right, okay. I guess I took it as in like they're probably going to sucker in as much retail as they can on this pull up, just given how things have progressed in the daily, and it's broken that big 50 psych level the day before. So whether it's time to sort of break some retail hearts is how I would have taken it. But yeah, that's good to know.
Yeah, I'm just talking about the overall money flow within the past, let's say, month or whatever, what have you. Just looking at that daily, it's obviously in an uptrend.
Yeah, sure.
And we're entering those new grounds.
Right. Look, unless I see something obvious or apparent, I don't know if I'd have a whole lot to say. So look, definitely feel if you sort of want to join me in this, Dave, and
Yeah.
giving additional sort of commentary, please do.
I mean, we can skip 30-second increments here. Then the pre-market, obviously, it's a little slower.
Sure.
I've got a question real quick. So when you see those controlling prints, what are your first thoughts?
For me, it's then sort of looking, okay, for those sort of prints, are we going to get a number 2 or a number 3? And what am I then seeing coming in after those control prints to sort of support one of those two cases? And I guess I'm still sort of early on in the journey where it sort of has to be something more glaringly obvious. Whether it's obvious money flow or obvious supporting prints to sort of then be able to build a solid game plan with calculations. So I mean, I saw that obviously those 55 prints. We're looking at from what I can see in the chart, sort of dollar increments. That to me looked like it was well above print personality. I'd be looking for at least to the or to the next psych level of 52.50. when it is money time. But yeah, right now I'd be sort of just trying to assess, what else is happening here in terms of what are those sort of day traders, market makers, doing or sort of preparing, on the back of those, on the back of that dominant market maker. No worries. Okay. All right. So that to me is, another market maker getting into that position. All right. So it's pulled up quite sizably. I didn't see a whole lot of prints. I don't know if we skipped something there, but that to me is sort of suggesting that either that or I don't know if that
Let
will
me
be
let me
profit.
give you some assistance. I was just waiting for you, David, to see if you could find your feet.
Yeah, sure, mate.
Right.
It's
If you look
please
below,
do.
okay, I'm gonna make this real quick so you can play along. You can still see what's going along. If you just
Sure.
look at what happened on the 57 from what I'm seeing and from what we pulled back, it looks like the intensity was exceptional, and not only exception, but look at the size of the bars they probably came down with. Do you see them? There's about 4 of them. Now, if you look at that, not only from 57 down to 54, that they were literally pressuring the stock down, it looks like it was complete exception. But as they were doing it, there was increase in volume. So they picked up the speed on it. When they hit it at the bottom to 54, you had 2 bids at 54. What does that tell you when it looks at price of that? They were literally smashing this all the way down and grabbing shares. What did it tell you at 54 when there was only 2 bids at 54 and straight away reacted with a bar right back up? It told you, and then look at the volume that came right after it. The whole time it went up, the volume was descending the entire time. The only thing that honestly, when I was going to interject a little bit a few minutes ago, it looks like a monstrous buy is about to come and go right back up through all these levels. The volume told you that, the intensity told you that, and what happened at 54 should have told you that. And the 55 bid, such a major cycle level, they ran it down, took what they could, went through the levels. They showed it on the volume. The volume went dead above 54, but above 54, that bar had a lot of substance. If you guys were looking, it was telling you that at any moment, and as long as that volume kept descending from above the 54, that at any moment you can get an absolutely massive bar shooting straight up to go back through the levels that it acted as an exception against.
Right. So had they exhausted the move by the time they'd sort of reached 54 and built grabbed what they wanted to grab before pulling back?
Yeah, how does it run through 55, 18, 20, 30, 40 prints, wherever that was you lot were showing, and then it hits 54 bang on with 2 bids, and that
Right.
massive bar that came and triggered right up, if you looked at it, that was the substance bar and everything you needed to start making your way back above the levels that it looked like it was an exception all the way through 57. Do you see those
Nice.
the way those volume bars are? Do you see how
Yeah,
big
no,
they are?
I'm following you
You
now.
see how
Yeah. Okay.
extensive those bars are within such big volume? That should tell you that they're pushing it down because their real job that they're trying to do is come back up and build on the way up from those levels.
Right. So almost like bouncing a ball from like a third story and having it bounce off the ground.
Yeah, well, you're pressuring the board. It's even worse, isn't it?
Yeah. Right.
So that's it. The volume would have told you that. I didn't see what happened at 57 and 56. But the way 55 happened and the way it went to 54 and the way that volume played and then how the volume after the first initial trigger went all the way down, the only thing you could expect was another monstrous bar that would come out of that.
Right.
And that's where they really start grabbing shares. So it's actually a little bit clearer than you expect.
Okay. That's it's insightful. I guess I was so focused on my tape, but I didn't really spend the time to actually just observe that in the chart. So that's good.
Because then the information's in the volume, isn't it, as well?
Yeah.
I just rewinded a little bit so you can have a better grasp of the substance within this bar up as well.
Sure.
In terms of calculations, what is your thought process on that?
Yeah, so my final target, just based on the, I guess the size of those prints in terms of how many multiples of the control print size, it gave me a target of 5250. And the bit where I was sort of a little lost, and I guess I still am a little lost, is just, I guess Doug sort of added another piece of the puzzle, was just how far up I expected it to pull back up. Is the bit where I'm still a bit lost on. I can definitely understand what you were saying, Doug, in terms of that bounce and how it plays out now, and how I understand the context now. But in terms of just sort of having an expectation as to how far back up that would pull, I mean, I guess the print line would act as a magnet in one respect, but yeah, that's where I'd sort of be. I'm sort of still not completely clear as to what I could have expected as a pullback before a potential trigger back down.
Just adding one thing at a time, David. That's all we're doing.
Yep.
Today you added something new. You just became a bit better. So you're on the right track.
Cheers, man.
Well, 13 of you are.
But I think from calculation standpoint, 55 being way above per personality, trading in dollar increments, it's safe to say that $1 plus would be an acceptable pull up, ideally maybe even to 57 there, given how the relative size of that.
Right.
And those are just rough calculations, right? Obviously you're getting these 56.35s, another market maker coming in, stepping up heavy right before the open, 4 minutes before the open on a pull up. You get that heavy closer to the pre-market, how much more of a pull up are you really going to get at the open?
And with this market maker here that we're seeing now, those 56.35 prints, would that sort of also sort of set the expectation that, hey, it may not pull up a whole lot more if sort of another market maker's coming in to sort of get ready to have the stock run down?
Yeah, I mean, just thinking about from the perspective of 55, it's definitely building on that in that aspect. But just from the amount of 55, just looking at that amount, I was from calculations how we're taught by Rich, 57 makes sense. And then you get this pull up and it's a little over $1, and then you start to see them come in heavy shorter term time frame. If this 56.35 wasn't present right before the open, I probably would expect the full $2 to pull up. But the fact that this came in right before the open, I'd be ready for a trigger down.
Yeah, I guess that was my question, poorly worded.
Absolutely,
okay.
Perfectly said, David. Absolutely perfectly said.
Yeah, okay, great.
Because I mean, think about how ballsy that is to come in at 56.35, especially if you knew that this market maker was going to build to the next cycle level 57.50.
And especially a couple of minutes before the open too.
Yeah.
Right.
That's so important. Those positions that come in right before the open that align with the dominant market maker that are shorter term, that are heavy, play such a significant high percentage role.
Where are your orders placed right now, David?
Sorry, Matt, can you say that again, please?
So David Torres right now just outlined the perfect two options for what we see. Where are you placed right now in your orders to get ready to exit?
Yeah, so I hear what you're saying.
Talk about that. Talk about what happens next.
All right, so I'd have a limit order for a short set. I'm still sort of divided as to whether I'd sort of work out my risk reward off the 57 or the print line at 57.30. Actually, I'd be more inclined, just I guess what we just discussed, to probably have it off the 57. So whether it was something like around 56.62, something to that effect. But actually, I'm wondering if that's even too high up at this point, and whether I need to factor in that 56.35 prints as to where I should be setting my limit order. is what my thought process is at the moment.
Just keep going. No help. Keep going. You're live in a moment. You can
Okay.
get the help after. Just keep going. You're doing well.
Okay, mate. Well, I guess at this point, yeah. So I'll go with the 57, given we saw the 56.35s. So if we're sort of expecting potentially a $2 move to the downside, I'd probably have something, you know, around a 40-cent sort of potential loss. So I'd have it, you know, 56.62, 56.63, something like that at the moment. Now that may change depending on what we see at the open, but that's where I would have it sitting at this point in time. And those 56.20s there, whether that would sort of facilitate that short-term push up there. So I think the market's just opened. And I don't know if I've just missed the move there, because that just looks like it's, I don't know if that's just the bar down from
I think
there.
it's the amount of volume really was sluggish and made it freeze, but
Yeah. But yeah, so I don't know whether and again, I guess that whether I should have then had my limit order based on those 56.35 prints sort of geared around that, because I would have just missed that particular short with that sort of volume.
Notice there's a print line around the same amount as well at 37. Add to that variable.
Yeah. I guess that didn't come in until after the open, but yes, I hear what you're saying.
David, put it on pause for a second. Okay, so odd when there's two Davids. All right, David, what did you notice about your voice as we started getting closer towards the open and what you were saying?
Oh, doubt.
Huh?
There was doubt.
No, what's interesting is you got more and more nervous. You started talking more and more gibberish as you got close to the open. But here's what didn't make no sense. Did you agree with the plan that David laid out for you?
Yes.
Did you agree with it totally? He gave you two options, right? Two very high percentage options that were really the only two options, and the only third option would be something that we didn't even plan for. But I would say he gave you a very good high 80% options, both of them, but two different scenarios. So if you've got the options, what should we really be doing as we're getting closer to the open, knowing the options are laid out for the open, and what did you do?
Okay, so I obviously missed one of the options because one of them was it was based on a pullback to 57. But to answer that question, Doug, if I know what those two options are, and if we can clarify what those two options are in a minute, I would have two different sort of level twos with two different limit prices set ready to go.
Right, so this is what you're going to do. I'm going to show you another way that you guys are going to get better in trading, because this is the moments that count. That's why I said just keep going. You straight away got nervous. You straight away started questioning yourself.
Yep.
Most of what you said, I don't even know what you were saying. It had you were actually reading retail. You were reading in between. You were reading all the noise. You were speaking it. That's why you put yourself there. But the reality was, the plan was laid out. And let me ask you even more. The two plans were, because the 50, he said, because the 35 came in so close to open, the size and magnitude of somebody wanting that much so quick, he said there's a possibility supporting MM come out and they just drive it down. We know we got 55 below. Yes, we got a pull up to 57. That takes care of our pull up. The volume showed that. Now you're coming back down. 56.35 says we got shares that we took on an exception down in pre-market. We pulled it up to 57 right before the open. I took the go-ahead shares. So David's first option, absolutely correct and right. It could just start driving down from 35. Secondly, he goes, but it just makes more sense, which I completely agree, to run it under 57 and bang, come right back down, go towards 55. That's exactly what he said. As soon as you took over, you started reading the noise. But if you would have just took what he said and said nothing, because there was nothing to say in the last 2.5, 3 minutes, in the open, you would have set yourself below 57, because you know these are shorts that we're for the high percentage shorts we're looking at. Where's the next place you could have placed yourself? What do you think? David, what do you think?
Yeah, no, I mean, I would say you'd work out your risk reward from that the 5635 print line, 5635 prints, and so yeah, if
So
you had your
I could tell you I'd be at 56.70, and then I'd be at where? 56.10 or 15 in case it ran straight down. Does that cover me both ways? Yes or no?
yeah, it would.
How's that? So if it pulls up on 35, will my 70 order protect me to cover in case I was wrong?
Mm,
Yes. The answer is yes. If it
yeah,
goes above 57 and drops down and I execute and I see everything I need, which is my second option, what do I quickly do with my order just in case? I move one above 57, right?
yeah,
But I would have been ready for both of David's options. The
yeah,
one that he wanted was under 57, which is what happened. And the second option, which he said could happen first, but either way, he's there. So could you have taken it under 37 anyway? Yes or no? Did you
yes,
need to worry about under 57, or would you say under 37 was just as confident and just as strong because we know who came in right before the market opened?
yeah, yeah. I guess for me, I only really understood one of the options. I didn't quite understand the other. So I guess seeing those two now, it sort of
All
makes it a
right,
lot clearer.
he
And having
said
the
it
two,
really well. And go back on the recording. He said it perfectly to the T. David, go back to where you showed him that and where he took it. Because one of
Yeah.
the keys is we could go through trades all day, but I want to know how you guys are within the trade. What is your mindset? How is the control over the way you see things and how you respond to things? You guys know there's a massive difference between reacting and responding, correct?
yes,
Right? We react, it's impulsive, it's emotional. Respond means what? We take it from a neutral stance, we look at the information provided to us, and we make the correct decision based upon the data we see. Two completely different schools of thought. So now, Dave, go back to that and just do exactly what you did with David. And then David, when he does that, you start and take over again.
okay,
He'll play it.
So I just paused it. So we ended up getting that trigger up with volume for them to have the building period, right? That bar up itself didn't have anything spectacular in terms of standout building. But then the minute after, so the smaller bar here above 56, we ended up getting these 56.35s, and that's a separate market maker. That's another it's not a dominant market maker, but it's another heavy market maker. For you to come in like this 4 minutes before the open on something that from the sheer amount at 55 on the bid, from calculations and our expectations on average, we can expect about a $2 pull up. So when we get once they trigger up and they start this building period, you see these 35s that come in that are very ballsy, right? So why would you come in this close to the open if you knew and understood that this stock was going to go up another dollar, $1.50 for that 55 to truly build? So this market maker was working in in tandem with the 55 and understood that the pull up period was going to be very short. So that the situation here was it could possibly push to 56 on one bar at the open, but you'd be ready for both case scenarios to where it does push to 57. That print line there, and you'd be ready for a trigger down. But also, I'd be ready for a trigger down right at the open. I think both case scenarios you have to be prepared for. I mean, at this point, it really doesn't even make sense for them to push it even higher. But and then I also stated that if this 56.35 wasn't present, you just remove it completely, I would still expect more of a building period at the open, and I would require more information and right at the open. So if this wasn't present, I wouldn't necessarily be as ready for a trade down to the 55 or have as much percentage towards the trigger back down as I do with these off-level ballsy prints closer to the open. So if those weren't present, I'd probably expect that statistical average of that $2 pull up to be there. So I'd probably expect a trigger up below 57, but this was just adamant, like Doug said, and it was just think about how to on a pull up after 55 bids, massive dominant that you print like this. They just knew it. There was no really other option at this point. It's one of those case scenarios where Rich says all the time where there's really no other option at this point. When multiple market makers align, what other possibilities are there? And the only thing we're talking about now is high percentage situations for taking an entry. And at this point, a simple trigger down is it was satisfied. The building period is satisfied, and the market makers that came in terms of adamant timing is present right before the open.
So my question to you would be, you said, you'd have to base on additional information as to, the next bar as to, which one is more likely. What would you be seeing in particular to sort of sway you one way or the other, if you don't mind me asking?
It's more of, though the game plan doesn't change, it's just the timing aspect. Because if that 56.35 wasn't present, this could pull up another 50, 60 cents right at the open to continue to capture that retail to furthermore drop it on them. So I would just require to see what the open information looks like if they're pushing it up on continued selling, or I just, in terms of what type of information, I think it would just be you'd be looking for the selling that's present, the building. This is a pull up to build, right? So you'd be looking for that selling, or those individuals that are selling and preparing for the short, and you wouldn't really want to see significant or huge off level buying. So at the end of the day, it's just more or less the same selling, but just it would be at the open rather than, and you'd be
Whatever that
expecting.
substance was essentially in the open.
David, you said that point on. So it's funny when you ask that, what would sway the information, David, Australia?
Yeah.
The only thing I could think is, it's like you walk to a fight, Mike Tyson's on your right-hand side, and yet you call your barber and say, could you join me instead? The
Yep.
information is so heavy that we should be looking for indicators to keep this short going. As David pointed out so rightly, if something came in and kept coming in on buy sides, I wouldn't pay attention to it unless it triggered and it was so big that you said, that doesn't even make sense. That's what your response would be. If something came in massively, it's all buying, big buying all over the place, to me, that'd be like complete confusion. Like now I don't even have a trade. Does that make sense?
Yeah, that does. Okay.
So it's not about what sways you. Like I said, if you're walking to a fight and Mike Tyson says, I'll join you, and then you call your barber, there's something wrong there, isn't there?
Yeah. So the probability is that this is more likely, unless you see something that, like basically overrides what this second market maker has done. It probably has a higher probability to trigger straight down from here. So whether I'd have a limit order in the low 56s, 5603, 5602, it seems like it would be a higher probability than had it, than it going to push to 57 and then coming back down.
Now talk through the same way using the variables that David gave you.
Okay, so I've got the limit order that I'd sort of have my finger on the pulse there with the would be on that 5602, and then the other scenario, if we do get that pull up, I'd have it at 5662, and but yeah, more inclined on the lower side, ready to go there. So I'm just looking for further information to see at this point which one is more likely to occur.
We do freeze a little bit at the open. This is kind of an older recording, so my computer did freeze back then a little bit at the open, and obviously volume was like in the 4 millions. So just do your best to really break down what you see.
Yeah, sure. So I'm seeing this 5620 that I don't see them changing the game plan, but that whether that can give us that little push up is how I'd be still inclined. But I'd be still inclined to keep my mouse over the short button with the limit order at the low 56s. All right. So at this point, I'm sort of understand the strategy. I just don't know if I would have been quick enough to hit the short button on that, and whether I yeah, because it's clear we're in the trigger now. I just, is it really just based on the volume at that point that I would have clicked short? Because to me, at this point, the short's in play. You've got, you know, a whole bunch of selling coming through here. If I was able to execute quick enough, it'd be then sort of managing the trade at this point. So more selling there, may have a bit of a pullback, but most of what we're seeing in terms of money flow is selling. Oh, that's, I'm going to assume a lot of that's just even more selling. I'm going to assume those 54 bids were some profit taking.
I pause. I have a question for you. So those 35s, 56 35s, do you think that was selling or was that shorting?
That was shorting.
Okay, so from that perspective of that second market maker at 35, how much money do they need to make to keep their position, keep their job?
I would imagine at the very least $1, probably more likely $2 to $2.50.
Yeah, it's definitely not $1. That much risk to put on right before them open, there's absolutely no chance that $1 is satisfied how much they need to make.
Okay, that's a good.
And then
Yeah,
the
I think we had a
short
similar
of the
discussion.
dominant market maker at 55, you're saying
Sorry,
250 conservative, right?
yeah.
So when you start seeing these covering coming in,
I would imagine that'd be smaller traders. That wouldn't be the dominant market maker.
yeah,
Or other market makers. They'd be sort of like just day traders at that point and
I
just
think
taking something off the table.
we see a lot of, I mean, I did this a lot. Students will be swayed by some covering when the dominant market makers, especially multiple, even 3 or 4 market makers that align, and they show that their price target is $2 or $3 away, and you start seeing some slight covering, maybe $1 or $2 away, and students will be swayed by that and scale out of their position or all of their position, when in reality the market makers are still in and still in very heavy. Just a thought.
Yeah, no, I definitely got that lesson from Snap the other day. So, yeah, no, point taken.
But when you know who you're following, how much they need to make, and you repeat that thought in your head, it makes navigating the noise a lot easier.
Yep, yep. All right, some nice ballsy prints going down. So I guess to my question around the timing there, with the initial trigger, because I think, you know, with my skill and speed, I would have missed that entry. Would you have just taken that purely on price action, given all the variables we saw
I
leading
mean,
to the
it hit 52 bids, ballsy. I mean, and then it pulled up another like 30, 40 cents. I think you had ample time to, if you truly understood and were confident in the game plan, you had ample time there. you'd be risking
Okay.
50, 60 cents
And
because your
there's
stop
another
would be
thing.
above that print line, but you had the
Let's
time.
take it back to the most basic thing you got to ask yourself. If there's one market maker, the first trigger is important. Why? Because he's by himself, right? If you know the supporting market makers, do you think there's going to be more than one entry?
No, I
You
guess
think
it
they
also,
all trigger down together?
well, I think it sort of creates more of that sort of, controlled scenario that we discussed the other day.
Yeah, but it has to, because you got more than one that needs to trigger his position. So there's always going to be more than one entry. There's usually 2 or 3 good entries that play around before it has a move, because you know one thing, right? Once it gets past $1 or so, that's when the fun begins, because the range is going to get fully extended when you got multiple market makers in there. So that also means you're going to have at least 50 cents to even $1, sometimes a little bit more, to find probably a good 75, 80% plus entry at any one of those points, because there's multiple market makers. So they're going to have multiple triggers. They're all going to jump in at various spots. But once they all are in, even if you're $1 away from your first trigger in a certain stock like this, you know your range is massive and it's going to keep getting pushed. So you don't have to worry about it as much when it's like this, David.
Okay, that's good to know.
Yeah, you can't be worried about cents when there's dollars to be made here.
Yeah, sure. All right, that's definitely food for thought. Thank you. Now, one thing I wanted to pick your guys' brains about is exiting or something like this. So we have a price target of 52.50. How do you guys? Because a lot of the time,
What's your price target?
52.50.
Did you look at 54, 53, 53.17, 53.62, 54.17, or is it just me that's watching the tape?
I
You
guess
still
I
at
missed some.
52.50?
Yeah, yeah. So it just sort of leads on to the whole passing the baton and sort of adding pull. I guess using your analogy, right? If they're not, if you've got that bulldozer just coming in and more bulldozers joining them, then okay, yeah.
So all I care about, one thing that happens a lot in these, is don't forget all the information that's come before your eyes. Sometimes you guys just process what you feel like seeing. You got to take it all into account. Let's be honest. Those have to be taken into account. Everything has to be taken into account. It's a running story, not the story that fits your puzzle.
No, understood. I think I've used the analogy before, and it's getting easier over time of just trying to drink from a fire hose at times, but it's definitely getting easier. So having said that, Doug, where would you place the target at this point?
All of that selling is going to 50 without a doubt.
Right.
All of that selling at some point, it is going to 50. And that was nothing. And not only did you see all that selling straight away in the open, where else did you see all that selling? It was in pre-market. That pre-market selling could have took a 50 on its own, couldn't it?
And so what the stock's doing now, is this where you're talking about where there's multiple triggers, where this could potentially lead to another trigger to the downside?
Now, let me ask you something. This is just a little bit, if you really want me to say how my mind goes. When I see too many of these guys coming in and shorting the crap out of a stock like Lucid, when it's this high up and 50 below, there's 2 things that happen. Just looking at what David said, he's completely right. On daily, we even knew it had a lot of buying and so forth in there. So a stock that's had this massive run up like this, don't you think coming down to 50 is just too much of an opportunity in a trade for them to take, make a lot of money coming down to 50 and then reestablish position again at either going above 50 or below? But if you look at this, they've initiated a massive short positions, quite a few market makers to play it to 50. So all that selling was, whether we like the stock or not, we've got what we need for a trade to 50. That's all that's saying.
Right.
Because you got to use, whenever a stock is like this was, if you guys remember, and everybody was all over it, loved it in the news, that's just nothing but opportunity for these guys, completing that opportunity. So right now, in my mind, definitely going to have to test 50 at some point.
Okay. And so those 53.98.
But for now, have you seen anything? So, okay, you had your 52.50 hit 52.68, right? So you set yourself a PT. Did you take off?
Sorry, could you repeat that, please?
Yep. So you had a 52.50 price target, correct?
Yep.
Why is the reason that would make sense to take some off?
Well, knowing what I know now, there really wouldn't be.
No. Why would there be a reason? Knowing that 52.50, which was a very smart price target for early information, but not for total after everything we saw coming down. But why did I say that is a smart area to take some or quite a lot off? What did you know for a good chance that's going to happen at that point?
There'd be games. Just being a psych level, there'd be some sort of games that would occur at that level.
Yeah. And why wouldn't you just pull it all the way up and bring it all the way to somewhere above 54, not close to 55? That would be enticing too much of the wrong crowd as well, and they'd have to be fighting themselves. So you don't want to go too far up. You want to keep in line with the trajectory, but you do take off 40-50% because you know you're coming up and you got a place to add back as well, right?
Right.
So one of the things, I mean, I know it's getting a little bit ahead of ourselves, but one of the things that we have to do as we get better as traders and we want to play a stock in its complete format is to understand that maybe that's not my end price target no more, because I saw selling at 54, 53, too much at 55. All that selling has to go to 50. But with 52.50 being my interim price target for the initial bounce, I should take 40, 50, 60% off because I'll get an opportunity, $1.50 back up to add back to my position to go below again. So in that respect, do you want to take all your position back up and run the risk of it coming all the way back to 55? Would you say, I made 250, I'm taking 50, 60% off? And then when it comes back up, or 70%, however you want to play your trade, then you come back up with all that selling. You know, as long as the buying is not going to surpass and it's going to stay within its lane, which we know it would, considering how many market makers are in this, you know there's an opportunity in stocks like this to add. These stocks make themselves perfect for adding and taking off and making maybe the range, or it moved $2. You could easily make $3.50 easily in these stocks.
Right.
If not more. So that's just another way of looking at it as well, David.
Okay. Yeah, I guess that's sort of next level up. I'm sort of still at a place of just single entry and sort of scaling out exits, but that's good food for thought. Yeah, because I've only really seen the one burst of buying. I think it was like at 53.98. That stood out. Everything else has been sort of insignificant relative to the selling.
Do you mind if I fast forward just to see how the stock ended up playing out? I feel like we hit all the significant points, really.
I take it this recording would be made available because I definitely want to watch it back.
Yeah. And I think we do end up hitting 50, and the recording just ends up stopping. But to Doug's point, we absolutely had another entry to take back down to 50, right? It's pretty evident, pretty clear.
Yeah. So I guess just looking at the chart now, Doug, if we'd taken our 50, 60, 70% off at 52.50, and then I'm assuming you would have had to have scaled out before you reached your.
Here's the thing. Look, it comes all the way back up, right? So let's say you got 50, it didn't hit 50, so 55, right? If you look, it comes all the way back up to 55 on low volume. It seems like nobody was interested to come in here for a while, and games are being played. So the prince would have told you as you're getting up there, is this a position to add, or will you be taking off? Now, are you holding your 50% all the way back up to your freaking entry?
No, you'd have to have a line.
You'd be mental, right? What's the thing that you got to watch out for when you are looking to take off and how much you're pulling back? You got to look at your triggers that took it to where you was, right? Because once it starts breaking triggers, then who's the one that's not holding it no more?
Yeah,
if it breaks those 3 triggers and starts breaking above those, who's the person not actually in control of it no more? The market maker. He's allowing it to happen, right?
Right.
Because he could easily just come back in and said, nope, the interim move, the immediate move is still going down. So when they played that, what do they say? They say, you know what, we're just going to be spending a lot of time playing games, collecting shares. But what you do know is, where does that ultimately need to go?
Eventually it'll need to go to 50. Yeah.
It's got to go to 50. So at some point you are waiting to see, you're picking your spots, you're looking at the type of volume, you're type of looking for the rest of prints. Look at the stock at the bottom. Do you think it was easy to judge your stock? Let's be honest. Look at the volume.
man, it's like, yeah, even
A
those,
lot of information, right, going on. Looking at
Yeah.
that volume says each bar had a lot of information. It would have confused most people. So sticking to the plan would have been the hardest thing in the world in this stock. But did it do what it said it was going to do in the end?
yes.
So was smart money in control?
Oh, always are. Yeah.
But it shows, right?
Yep.
So you can't look at a chart afterwards and say, well, look what happened here and there. Listen, it could do whatever the F it wants. But they were still in control when they wanted to be. Simple as that. That's why it goes back down to 50. And that's why with that much volume, they still took it to where it needed to go. So once you go to that 52.50, you took, like I told you, 50 to 70% off. Now you're choosing your targets. You're looking at, right, where should I see smart money coming back in? Bam, it didn't. Second time, bam, it didn't. Now you're just thinking to yourself, if they're not coming in, this could float and go all the way back up to even 60. Because now there could be a trade that was initiated. That's why no one's coming back in. They might be long trading it all the way through all the areas that they broke, come back to the top, make some money on the long, and then they'll initiate back into their short position, steal shares, and come all the way back down. All right?
Right.
Exactly how it can work. All right, I'm going to get going. Wonderful as always. Speak to you all in the morning.
Thank you so much, Doug.
Yeah, no worries. Have a lovely evening, all of you.
Thanks, Doug. Have a good night.
Yeah.
All right. Well, that wraps it up for us. So